Welcome back everyone. We are doing a video on a stock today and it is Apple. We have looked at it in the past, so please feel free to go search the YouTube videos for the Apple video that I did last. If I remember, I will try to put it in the description of this video so we can follow up with it. But here it is naked. We are on a monthly time frame. I will go to a weekly first just to give you guys a quick look, but then we're gonna go back to the monthly to show you kind of like where I expect it to go. So right now, this is the weekly time frame, and you see Apple doing a nice, beautiful little uptrend, and everything looks peachy keen for upside continuation. The only difference is that over here you had a head, and you made a left shoulder. Shoulder was a fake out, and you had upside continuation, and these shorts that are here got trapped, and they have not been able to get out until, what's it here? Nope, they did not get out over there either. So basically there's a lot of shorts trapped and we are just going up and up and up, and we have come to another distributional top. We are making that little left shoulder thing that usually it does, but this time instead of being above the yellow EMA, you are doing it below the EMA. And when you do it below the EMA, the risk of the EMAs crossing, the yellow going under the green, is there for that next leg down into the purple and then possibly the blue line. Now you can see that we are just starting that structure. Okay, I'm going to turn on the drawings, which will show you the fibs that I have already plotted, and it will also show you the lines that we had from last time. Actually, I'll do it on a monthly. We already put horizontal lines as to where we expect it to go. So here all that stuff is cool. So these are the three solid lines of support that we placed last video, and this fib is what we placed this video. Now, if you guys haven't already subscribed to the channel, please sub to the YouTube channel. Leave a comment in the comment section below and leave a like for the video. That's all I ask because it will help the YouTube algorithm share my video. So hopefully in the future I can make a living off of YouTube in these videos, doing what I love doing and not having to be forced to work mindless job. So if you guys could do that, I would greatly appreciate it. If you guys are interested in trading with me live, please feel free to join the Discord server. The link to the server is in the description of this video below, alongside all the other affiliate services that I use and recommend that helps this channel grow. So thank you guys so much for your support. Back to the video. As you saw that I put up the fibs here, and I'm looking for us to go into $206 here on Apple. And between 206 and 195 is probably going to be the first time I actually look to enter into Apple with a small allocation, and then being ready for 155 to be adding into that 195 entry all the way into 155. That is how I am looking at it right now in this fashion. Come on, handy dandy tools. Sure, whatever. So that's how I'm looking at this consolidation. I'm going to be looking for a descending channel flag. I know that people are probably going to, I don't know, panic a little when this breaks. You know, people will panic a little bit when we get under 230, but I'm looking for that to happen. I'm looking for the midline of this channel to get tested. If we get a little bit of a dead cat bounce here, that's cute. I'm going to probably be a little bit patient after my first entry. And if we get this deeper dive, I will be much more interested in Apple. I will look for that double bottom on the channel and break out. One more test of the channel and break out in an expanding wedge fashion. Chi and chi. So that's how I am looking Apple to play out, and it is going to be a while. Just letting you know that if all this I doodled is true, it will kick in after Apple loses $228. And now we can go to a lower time frame, like weekly, after I did all the analysis on the higher time frame. And here it is. Let me zoom this up a little bit. Let me take a sip of my coffee while this catches up. All right. And here it is on a weekly time frame. So this week, you are already having trouble getting above 232. I don't even think you're going to get above 235. You can see this wick rejection that you had from 245 all the way to 235. And then this week candle is having trouble even getting above 232. So the people who sold originally and created this head are basically trying to do what they're doing, and it's basically going to be a distributional Wyckoff model. Here's your left shoulder, here's your head, and you are currently forming your little shoulder right here in this range. And once this all finishes, maybe by Friday, you will see probably price action just do a quick move down, maybe get a little bit of a test up into the channel midpoint, and then a rollover. So that's basically how I am watching for Apple. Just give it a couple of days, be patient. It's probably big money that's going to manufacture this move as they take profit. Due to the fact that Apple is a very large market cap company, to make it even move from here to here was probably billions of dollars. And it was institutions that are either shaving their position in Apple or cashing out, whatever they're doing. The point of the matter is they are distributing their equity, which is the shares of Apple, amongst retail plebs who are trying to buy into it without realizing that this is a distributional schematic. The accumulation schematic will happen in 195 to 155, and that's when they will be selling in fear and panic. They're buying right now at the worst time. And when they start selling at 195 to 155, which is the perfect time to buy and hold, that's just how the market works. Their psychology, the mentality is just wrong. So yes, I like Apple. I have good faith for upside in Apple, but you can see what Apple does every time it gets above these green and yellow lines. It does a little channel. It does a little descending channel. It's doing this descending channel right now. So we're trying to catch it between yellow and green. Here's the yellow. If you want to front run my 195, you can buy at 216, which is the green, and consider yourself buying the low of the neckline. If the head and shoulder is a fake out, the neckline will be the best long opportunity, aka right here. This green EMA is the neckline. And it's only when the neckline fails that you get this red path to the downside actually kick in. Okay, that last line I just drew is where all the stop losses are sitting of the people who are trading above this neckline and using the, like proper trade management, risk management. They should have a stop loss underneath this or underneath $209 or $206, because then they know that the upside possibility is limited and that hunting the liquidity of downside is more than likely. And the reason it's coming to the downside, hunting liquidity, is because of this right here. You have this liquidity here that can get tested. Okay, and then you have this liquidity right under it. Sorry for the unclean lines. It's because I have a little bit of lag on the computer. So if it comes down into here, coming to this level, all you're doing is testing this liquidity, and it's a healthy bounce for upside. So once you come to this level, it's 173. 173 is where I told you I'm going to be looking for like I'll be accumulating between 195 and 155. 173 is ideal average to buy where the institution will buy. And you saw the reaction on price action. It's rare that it even goes to the purple line. So if you can get along off of the purple line, it's very advantageous to you, which is around 173, and that is price is at 232 right now. So if you go to 173 from 232, that is a 30, almost 25% drop. Are you ready for all the people panicking and screaming and crying with Apple when it does this 25% drop? Because I'm already giving you all the factors of saying that this is what needs to happen for this stock to stay healthy for upside continuation. It needs to blow off a little bit of steam into this range, test it, prove that this is a fair price for Apple, and then continue up. If it's not a fair price for Apple here at 181, then it's going to go naturally to the next average, which is 155. And then you already saw this is the low of the low over here at $90, where our next average is. I do not expect that to come unless we're having some major problems in the market. Let's go down to one lower time frame, the daily, and I will reiterate the purple EMA situation. You can see here was the last purple EMA situation on a daily, and you can see we are doing that dance right now above it. Once you do the dance and consolidate, that this was a nice triangle consolidation that broke down, by the way, if you can see it. This was a beautiful consolidation. Gave you all the warnings you needed that the downside was coming, and boom, broke down to the downside. Here's your reverse triangle accumulation. I did not draw that nicely at all, but you get the gist of what I'm trying to say. Here's your flat bottom. Okay, I'm not going to butcher that anymore, guys. Sorry, there's just too much lag on the computer, and that's why that's happening. But this was an accumulation triangle, and then if you want to do a W, you can say this is the double bottom, and then you broke the range. So it was ranging up, down, up, broke the range, and that's why you got this nice impulse up because of all the liquidity that was here. If you would have broke the range down here, you would have had a nice move straight down to 155 to 140. But you basically went to the upside because it's a healthy stock and it's uptrending. So the same situation here. If you're healthy and you're uptrending, you won't lose the 122, 123 area, which is what we discussed. And like the neckline, which we already talked about, is around 2015. Okay, 215. So if this level gets lost, the insane likelihood of, look at this, 180, 170, 180, 150. Your second line, EMA, is already lining up with all the other doodles and dangles we did. So our leading indicator, which is our Fibonacci, which is it's always sitting, it's waiting for the levels to tap, is giving you where we expect it to go. And your lagging indicator, which is your EMA, which is going to change every daily close with the data point that comes at 8 p.m. The daily close candle comes, and then all these EMAs move as according to the volume of that day, is giving you the same level over the average of whatever day this EMA is giving the same 181, and your neckline is matching up close to the other EMA over here, this purple 100, the purple EMA over here at 222. So this is what I mean by confluence with technical analysis. You have your own doodles. You have your lagging indicator, which is your EMA. You have your leading indicator, which is your Fibonacci, all giving you similar areas of interest. Now what you have to do is be patient for price coming into those areas of interest, and then you act accordingly, managing your risk accordingly with the analysis you did previously. Okay? So that's basically what I have for you guys on Apple. I hope all of this info was helpful and beneficial for your trading plan moving forward. If you guys have any questions or concerns, leave it in the comment section below. I will get back to every question as I always do. If you could help me out personally, I would greatly appreciate a sub of the channel, YouTube. Please sub it. Please like this video. Please comment below and let me know how I'm doing. I would greatly appreciate that encouragement so I continue doing these. And keep in mind, I do not get paid a penny right now from YouTube. I do all these videos every day completely for free. The only financial reward I get is trading my plan and making my money accordingly from my own analysis. And I have a private Discord group where some traders who are trying to get, to the next level. I mean, we got people in there trading like 5, 6 figures. So they are with me and they pay a small fee a month, like about a cup of coffee a day, to basically just have me point out anything that I see throughout the day. So we're always here all day. We're trading for a living. We're trying to keep each other responsible and trading our own plan. But we do collaborate and make sure that if we can prevent one another from losing money, we would do that. And if we see an opportunity where we can share it with each other and make money together, we do that. So please feel free to join the Discord server. The link to the server is in the description of this video below, alongside all the other affiliate services that I use and recommend. All my crypto trading is done on MEXC, so the affiliate link that I have for MEXC in the description of this video below will give you the same discount on rebates that I get due to the volume that we trade. So we're all equals in this, okay? So please feel free to come join if you are interested. If you have another asset you want me to make a video on, leave it in the comment section below. And last but not least, just leave a like, subscribe, press the bell button for notifications, and I'll get back to you in the next one, guys. Have a great day, be safe, and make some money.